Picture this. You're holding a crisp $100 bill. Now, you could spend it on a quick meal, a night out with friends, or even an impulse buy. But here's a thought. What if you could make this $100 work for you instead of disappearing into your weekend expenses? What if you could use it to start building wealth, create a safety net, and even make it grow without constant effort? That's the difference between living paycheck to paycheck and learning the basics of financial freedom. And it all starts with a small but powerful decision, choosing to invest rather than spend. In this video, we're breaking down 6 proven ways to start investing with as little as $100. Stick with me until the end, because the final step might just surprise you with how accessible it is. And by the end, you'll not only know where to begin but also be ready to take the first steps toward a wealthier, more secure future. 1. The power of starting small. $100 as your first step. Let's start with a fundamental truth. Wealth doesn't just appear. It grows from small, steady choices made consistently over time. In fact, most successful investors started small, often with an amount so minimal, others doubted it could even make a difference. It's easy to think, I'll start investing when I have more. But what if that perfect moment never arrives? What if you could start now, with just $100, and let that initial amount become your launching point? Imagine this $100 as a seed. If you nurture it, it has the potential to grow. Yes, it'll take time and discipline, but every dollar you invest today has the power to compound, turning even modest beginnings into something substantial over years. And hey, let's be honest, what's the worst that could happen? You'll survive if you misplace a single $100 bill, right? So let's see what we can do to make that $100 work for you. Now that we're thinking about that $100 differently, let's look at where to start putting it to work. We're beginning with the simplest, most secure options. 2. High-yield savings accounts, the basic building block. Step 1 is straightforward but powerful. A high-yield savings account. It's not glamorous, it won't make you rich overnight, but it's safe, secure, and a fantastic starting point. A high-yield savings account, or HYS, typically offers up to 4% annual interest, depending on the bank or the market. Think of this as your backup, a place to grow your cash risk-free while keeping it accessible. This isn't about getting rich, but it's about setting up a financial foundation. Each month, that 4% interest works for you, even if it's a small amount at first. And if you keep adding to it, let's say $50 each month, you're building an emergency fund while earning passive interest. Think of it this way. Imagine your savings as a digital piggy bank that grows on its own. Pretty cool, right? Especially for something as easy as opening an account. Once you have a secure spot for your money, let's look at ways to actually invest it for growth. The next step is a great choice for beginners. 3. Micro-investing apps. Start with spare change. Now, let's talk about a simple way to get into investing without risking everything. Micro-investing apps. Apps like Acorns, Stash, or even Robinhood allow you to invest small amounts into diversified portfolios. Some apps even have features that round up your purchases and invest the spare change for you. This approach is perfect for beginners because it's automated and diversified. By investing a few cents or dollars at a time, you're buying into stocks, bonds, and other assets without needing thousands of dollars upfront. Imagine walking out of a coffee shop, and with the extra change from your latte, you just bought a small slice of the stock market. You're now part owner of a portfolio that includes major companies, all without even thinking about it. With micro-investing apps, you're not only saving spare change, but also starting to invest in real assets. Let's take it one step further by looking at an option for those who want a little more control. 4. ETFs and index funds, a strong foundation in the stock market. Next up, ETFs, exchange-traded funds, and index funds. If you've heard of Warren Buffett, you might know that he famously recommends index funds as a reliable, low-cost way to invest. And the best part? You can start with as little as $100. An ETF or index fund is like a basket of stocks, holding pieces of multiple companies, from giants like Apple and Amazon to smaller players. By investing in an ETF, you get the benefits of owning a slice of each of these companies without the risk of betting everything on a single stock. If one company in the basket doesn't perform well, you're protected by the others. It's diversification, but on a budget. Wondering why you don't just pick stocks yourself? The answer is simple. Most people aren't stock experts. And with ETFs, you're using a proven tool that's shown to outperform most individual stock pickers. ETFs and index funds are a solid choice for steady growth. But for those looking for something a bit different, let's explore a unique way to diversify further. 5. Fractional real estate investments, a slice of property ownership. Real estate is one of the oldest, most stable forms of investment. But of course, most properties cost far more than $100. Here's the exciting part. With fractional real estate platforms like Fundrise, you can own a slice of a property for as little as $10. Fractional real estate allows you to invest small amounts in commercial or residential properties, and you receive a share of the rental income and potential property appreciation. So, your $100 might own a fraction of an apartment complex, office building, or retail center. Imagine building a portfolio that includes real estate without ever stepping foot inside a property. And remember, this is something you can grow over time. With fractional real estate, you've added another layer of stability to your investments. But let's explore a modern twist on investing that might intrigue you. 6. Peer-to-peer lending. Earn interest by helping others. Lastly, we have peer-to-peer lending. This option isn't for everyone, but it's an intriguing way to earn higher returns by lending small amounts to others. Platforms like Lending Club let you invest as little as $25 per loan, earning interest as borrowers repay their loans. Think of it as a bank, only you're the one lending the money, and you get the interest. This can mean returns of 5 to 10% on average, but it's important to remember there's some risk here. As with any investment, just don't go lending out your lunch money, alright? You want to make sure you're only using funds you're willing to risk. Alright, so there you have it. 6 ways to start investing with just $100. We've gone from safe options, like high-yield savings accounts and micro-investing apps to ETFs, fractional real estate, and even peer-to-peer lending. Now, if you're ready to boost your income even further, check out our next video. Asterisk side hustles that can boost your income in 2025. Asterisk this video dives into practical, high-impact ways to make more money that you can start investing even sooner.